Yeah, morning traders. It was one of the most anticipated bear market rallies I think we've ever seen. But it played out well. You know, the S&P was up 6% and we were up 9.5% in the futures from those lows of 38.07. Yeah, we're currently sitting at 41.68. I think there is probably some scope that we continue to push a little bit higher playing through, perhaps into the 50-day moving average at 42.71. You know, a really big move would get us another 5% and that gets us up to 43.70. But I think everyone's lining up to look to fade those moves and look to buy volatility if we were to get into those kind of levels. Now, of course, everything that we wanted to see worked last week. We saw the dollar index down 1.4%, so that's 2 weeks in a row we've seen moves of that magnitude. Got scope that we could push down into 101.32 on the dollar index. But generally speaking, I think the dollar was working really well as those leverage funds really pulled back. The NOK working well, the Kiwi, the Aussie working well, the Swiss franc also worked well against the US dollar. So it'll be interesting to see if we can see a continuation of that move. That would be very positive for risk assets and potentially get us into 42.71. High yield credit spreads came in 70 basis points. The CDX, the high yield CDX down 66 basis points. We saw the VIX trading to 25%. Elsewhere, I mean, certainly the Feds, if you look at the balance sheet, the liability side there, reserves grew 0.5%. That's very positive for risk assets. It's added liquidity there. You've seen real rates coming in 8 basis points. So everything that we wanted to see was working. I think also, a little bit of repricing with rates coming down from around 192 basis points of tightening by the end of the year into 182. So look, we're looking, can this continue going forward? Well, certainly crude's on the mind. A push higher, I'm not so sure that's going to be good for risk assets. This week, in terms of drivers, ISM manufacturing numbers 54.5 as expected. Payrolls on Friday, the market's looking for 325, an employment rate of 3.5%. Obviously, watching those average hourly earnings, market's looking for 5.2%. I think we've got a whole raft of Fed speakers you can see here. PMI numbers out of China will be quite interesting to watch there, as will be the reopening side of things as well, watching Chinese markets very closely. European CPI numbers in terms of the estimates going to be watched very closely. We've got 13 ECB speakers, the Bank of Canada as well. But I think we're taking a short-term view that perhaps there's some further downside in the US dollar, further upside in equities. We look to sell into that move.